everybody. Welcome to TraderMerlin Show. It is your Wednesday afternoon. Are we on Wednesday? No, we're on Tuesday. It's Tuesday. That's right, because the Ethereum happens tomorrow. We'll talk about that in just a second. I feel like a little tropical. I guess I'm joining the mood here. We've got Liz. Where's Arizona? Where's 100 degrees? Lori, 100 degrees in Phoenix. So I don't live in Phoenix. I'm more with Big Ab with 72 degrees in San Diego. Loving that 70 degrees here in Southern California. Anyway, hope you all are doing well, whatever the temperature may be in your neck of the woods. Today, I'm going to focus predominantly on questions. I had like 5 that came in. One is or a couple of them are a little older. Apologize for the delay in getting some of those, but I will look at a bunch of price charts today. A lot of the questions that came in revolving around digital assets and cryptocurrency, particularly because of what's going on with the upgrade. Big Eb had one yesterday with regards to his Ethereum over at Lido. So I'll start with a little bit of the Ethereum stuff, and then I'll move into broader markets. We'll look at specific securities. Of course, if you have something you want me to check out on today's show, just type it in the chat. Put a couple question marks before for anybody who may be new, and I will get to all those as we progress through today. So here is, oh, by the way, since you guys know I told you I would do an AI graphic almost every single day on the show, but you may notice that this is not AI. I created this one a long time ago, and I just kind of like it, so I stuck with it. However, yesterday I told you I had some really interesting pictures of Sam Evans when he was on the show that were generated by AI, and I thought, you know what, I'll show you guys those just so you can have a good laugh with me, because some of them were great. This picture, I think, looks exactly like Sam Evans, but probably in 15 years, and there it is. Look at that picture. I mean, that looks so spot on to Sam. The hair is wild. Sam always has wild hair. Got the little beard going. He's got his little sweatshirt hoodie. I thought that one was great. And I had one more which you might enjoy. Usually when you do Midjourney, it will spit out 4 separate images, and all of these look rather dapper. I don't know what's going on with the hair over here in this one, but anyway, I thought you guys might enjoy that, because I did say I would use an AI graphic on the program every day. Unfortunately, I didn't get a chance to do one for today's show. So let me start off right into listener questions and go from there. If you look at Scott's question, it really is an important one because of what's going on with Ethereum. He says, I have Ethereum at Coinbase. Should I do anything with it because of the upgrade tomorrow? The answer is no. You really shouldn't do anything. So here's the graphic I created, another AI one. I use this for OTA in my Monday Morning Must Know. It's just kind of a technological upgrade mechanism piece of Ethereum here. The deal that's happening with Ethereum, just for those of you who may not know, is it's going through an upgrade that will allow you to unstake your cryptocurrency. So this morning in my crypto session, we were talking about methods of staking, automatic staking, manual staking, and how some of them offer lockup periods. And Ethereum has been permanently locked since they did the merge, right? You have to lock your cryptocurrency in there for an indefinite amount of time. Well, with this upgrade that's coming out, Shapella, it's also called the Shanghai upgrade, they are allowing you to now unstake your cryptocurrency. So there's all kinds of speculation on what may happen to the network because of things like Lido Finance, which has been creating synthetic Ethereum and allowing that to trade freely on crypto exchanges. So huge unknowns happening tomorrow, but to answer the basic question there for Scott is, you don't have to do anything. Really, you shouldn't worry at all. This is just one of those things. It's a network upgrade that they've been testing. It's been on multiple test nets, so most likely nothing will happen tomorrow. It should all go smoothly. But what it means is the exchange where you do have your crypto, in this case, Scott says he has a Coinbase. I have some over at Binance. I know others of you have different locations. Each one of those locations where you currently are staking your cryptocurrency or have your Ethereum staked, there may be different rules. For example, Binance says we are going to absolutely honor the upgrade to the network, of course, but what we're going to do is we're probably going to wait 56 blocks worth of data, which is only like less than an hour. Actually, 15, yeah, less than an hour to do 56 blocks worth of data. But they want to wait a little bit longer than normal just to make sure that everything is stable and not put a huge demand on the system right as the upgrade happens. So what the concern is that as soon as this upgrade goes through, which, by the way, I will show you the countdown timer to this right now. Here's how far we have to go to that upgrade. So countdown to Shanghai, 1 day, 1 hour, and 21 minutes. So tomorrow at roughly 3:30, actually it's like 3:28 now. The time is slightly changing. Just about an hour after the show, we will have the Shanghai upgrade going through. And essentially, the worry is that most people are concerned that you're going to pull out your Ethereum right away and just sell it on the open market. The truth of the matter is that many of these holders of Ethereum are underwater. If we look at the price chart for Ethereum and you think about how long people have been staking, a lot of them have been there since 2020. I started staking mine in 2021. So let's go here to the ETH list here. Give me 1 second to bring up Ethereum. So here's Ethereum, and I'll bring this up to a daily chart and zoom out a little bit. So a lot of people, if you look at this, there's too many lines on the screen right now. This is because of other class stuff. Let me just get rid of those lines. I'm going to use this blue line here and move it up to current price. So anybody who bought and staked Ethereum above that blue line is currently underwater. So there's probably not the incentive for them to unstake it right away and immediately sell it on the open market. So I think that might be a little over dramatized by the industry. Now, there certainly will be some people that are going to unstake it and take some money because maybe they need that money. But I, for one, will not be moving or unstaking my crypto. Let me rephrase that. I'm not going to sell my Ethereum. I will unstake it because currently it's at Binance. And as Jill Pollard says, but do you believe Binance? Binance has lied to us before, right, Jill? Jill was in the CIL sessions with us, and Binance said that they were going to give everybody that held Ethereum, that they were going to give them the ETHW, the proof of work fork that happened when they did the merge last year. So that didn't happen. And yeah, that left a sour taste in my mouth. That was them giving you the fork, which they kept all of that, and I think currently now the ETH fork is trading like $3.50. So yeah, I don't really trust them that much, but that's why when this merge happens, or this upgrade happens, I will unstake my Ethereum. I will be moving that all over to my ledger where I control my private keys and restake it manually from the ledger, which is a much more complicated process than most of you are used to, right? Most of you are used to going to like a Kraken or a Coinbase or a Binance and hitting that little stake button and everything's done for you. Well, when you go do it manually, you need to select your validators, and there's all kinds of other considerations that you have to go through to be safe with that regard. So, Scott, you don't have to do anything with your Ethereum. You didn't mention whether you were staking it or not. So if it's just sitting there, no, you don't really have to worry about anything at all. My recommendation, regardless whether there's an upgrade to the network or not, is to move your crypto off of the exchange. Get it off of Coinbase, get your crypto off of Binance, get your crypto off of Kraken, get your crypto off of, you name it, BitMEX, Bitfinex, get it off of all of them. Yeah, we got the hard fork from Binance. That's right, Liz. I moved all my Ethereum over there expecting to get, not all my Ethereum, most of my Ethereum over to Binance expecting to get that ETHW fork, and nothing happened. So that's the basics for you, Scott. Let me see real quickly. JR says, any good primer videos to better understand today's topic? I don't want to feel like I am always interrupting. Oh, you feel free to type in a chat. A lot of times these guys will actually, we got a great group here. No one's real hostile or anything like that. If you do get hostile, I block people, so that makes it easy. But you can ask the questions, JR. Happy to help you. Underneath the video, actually, no, it's not underneath this video. I should include it in that. Actually, I think it is. In the description to this YouTube video, there is a 6-video primer that I did for Online Trading Academy that I included on this. That'll give you a basic understanding of crypto overall. But yeah, this topic might be a little more complex than most. Are we able to move it right away, or will there be a waiting period? So you should be able to move it as soon as they let you unstake it. And that, according to Binance, that's what they said. But I think the number I read was 56 blocks of data. So each block on Ethereum is 15 seconds. So you have to wait 56 15-minute segments. There you go. Is that the same as... Pretty close, Lori. Pretty close. Merlin, do you think the crypto miners are not good trades long term? Look, it's just not something for me, GD. If you look out there at these mining companies, I think that the regulators are going to put more and more pressure on it. I mean, I'm just going to bring up some of the big names. You know, look at like Riot Blockchain. They've done great. I mean, it's been a huge, unbelievable run from $3 to over 12. And this is predominantly because the price of Bitcoin has been running and the whole crypto market. If Bitcoin continues to run, then miners will be a good play. Period. And right now, Bitcoin's running. There's Riot, there's Mara, right? They all look really good. However, at some point, I do feel the regulators are going to start cracking down more and more. Right now in Texas, there's a new bill going or being proposed, potentially going through, that's going to limit the miners down there and create all kinds of issues because a lot of people move to Texas to do Bitcoin mining. And it's brought a lot of taxes and business and jobs to Texas. But of course, it's energy inefficient. They're using the fumes from oil manufacturing. Like, come on. Anyway, you get me all riled up. All right, so the second one here is crypto as well, and this is from Bill. So Bill, real easy one today. He says, I have about 5K sitting at Bittrex, and they are shutting down U.S. operations. Honestly, Bill, so are a lot of other crypto exchanges. This is probably going to become more of a recurring theme. That's why I'm encouraging everybody to get their crypto off there. He says, I've been trying to figure out how to get it off the Bittrex, and I'm finding I don't know how to finagle it to where and to where. Can you please give me the simplest way that I can do this? And I'm not a geek, so just make it as simple as you would. That would be great. Okay, so let's do a real simple thing here. So the first question I got to ask Bill is, what do you want to do with the crypto that you have? You say you have 4K at Bittrex, but is that $4,000 in Bitcoin? Is that $4,000 in US dollars? Is it $4,000 worth of Ethereum? What is it sitting in, right? If it's dollars and you just want your money off, that's real simple. You can go from, I don't use Bittrex, but there's probably an ACH function where you can click a button, link it to your checking account, and simply send it there. So go to your account settings in Bittrex and see if there's an ACH set up. If not, you can click on your US dollar. There's usually some dots or something next to it that says withdraw. You click on withdraw, and then you can move that money to another location. Now, in many cases, it's in US dollars? If you just want to get your money off, then go to the account settings and go to the ACH part, and you can wire it right back into your checking account. If there's no ACH, there's usually a wire transfer form, which will probably cost a couple of bucks, but you can now have a wire sent from Bittrex to another exchange. If that doesn't work, because I don't use Bittrex, so I don't know their infrastructure, the more challenging way to do it would be to buy crypto, buy Bitcoin or something, and move it to another location. So I wrote out these two basic things here. If you're trying to move that crypto off that exchange, number one is convert it to USD and do an ACH into checking. My bank is not hooked up. Well, if you can hook it up, go ahead and do it. Right? You can link it up. If they don't allow ACH, then you probably have to use a wire transfer to pull that money out. So you'll see where it says withdraw. Maybe there's a wire transfer option there. If you can't do it that way, there's no wire transfer, there's no ACH, then what you can do is you could buy crypto. So let's say you just bought $4,000 worth of Bitcoin. So you buy $4,000 of the Bitcoin or whatever cryptocurrency you're happy with, and then you could move that to another wallet. And I put on that screen a non-custodial wallet. What that means is that you keep your private keys. So that means don't send it to Coinbase, don't send it to Kraken or Binance or Gemini or anything like that. You send it to somebody, download an app like Trust Wallet or Atomic Wallet or Exodus or MetaMask. Or these are non-custodial wallets where you control the private keys. That way you can just send your crypto there, consider an investment, and just hold it for as long as you're comfortable with before you move it away from there. So those are the three things I would do. If you want just your money out, you want your cash back in your checking or savings, there's an ACH, set it up. If there's no ACH, then I would go and see what the wire transfer is. There's always going to be a withdrawal feature on how you can take that money out. You have until the end of April, so you got a month to figure that one out. What I might do, Bill, if you email me again after, try all these solutions, and if it doesn't work, email me again, because I can go in there and just open up a dummy account and just click through all the buttons and find out where it's at. But most likely there is a ACH or a wire transfer. That'd be the easiest thing if you want the dollars. If you want to buy some crypto, even better, then move it somewhere else. Cool. Yeah, and you just have till the 30th, Bill, so don't freak out. You have until the end of the month, but let me know how it goes. If not, I can walk you through the process, and maybe I'll open an account, set up an ACH, and show you how it's all done here live on the show. All right. So let me real quickly run back through some of these questions. Does the non-linear have any relevancy to the technical analysis when viewing the chart? I'll get back to that one. That's more of a trading one. Merlin, how do I stake while keeping my ETH on my ledger? I'll let you know in a week. So I haven't done it. I moved from multiple accounts over to Binance because the staking was offering at the time was 6%. Now it's 5.7%. And all I did is click a button. So that was just easy for me. Plus they were supposed to give me the ETHW, which they never did. In a week, Big Eb, I'm going to have done that whole process, and I'll probably just show you here what I've done and kind of how that staking process works. But I'm going to move it all to my ledger. Actually, I'll move a portion to my ledger, stake from there, make sure it's all good and working, and then I'll do the rest. But I can't tell you how you do it right now because there's a bunch of steps and I haven't mastered those ones yet. All right, let's go to the next question. This is from Roman. I was thinking of moving some of my money into metals. What are your thoughts? My thoughts are, I wish I had a train sound. Choo-choo, because you missed the train. I mean, should have been in metals earlier, but let's see, what are we looking? And again, you didn't say, Roman, what metals you were thinking of. Typical ones people looking at is gold and silver. So let's go up here to our futures contract. I'll start off by looking at gold. Gold's looking great, all right? We've been talking about this one for a while. Even back here when we were in the 17s, 1800s, I was saying 2000 is our target. Well, we hit 2000. We broke through that. Today's activity up slightly, just 0.76%. But I do think you're going to challenge these all-time highs. So I do believe that there's still some meat on that bone, Roman, with regards to buying some gold here and having more upside potential. I'm more bullish on silver. I have been for a while. Unfortunately, my silver's got taken away from me. That was my 2020 target. Let's get rid of that one. From an overhead perspective, silver looks like it has a clean shot all the way up to 24, which irks me because I sold calls against my position at 21.50, which means I will lose all of it as of this Friday. So, okay, no big deal. But it's just been looking really strong, especially the last 2-3 weeks have been absolutely incredible for silver, looking phenomenal from $18.40 up to $23 even today. So I think it looks great. You do have a flag pattern that formed today. You call this a bullish flag right here, but it looks like that trend is still trending to the upside and strongly. So if you're thinking of moving money to metals, it's almost like you should be waiting for a pullback, right? It's gotten a little extended here, although this is a very bullish pattern. I feel like you're kind of chasing it at this point to jump in. But then again, Roman, I'm not sure what metals you speak of. So let me go look at some of the other precious metals, unless you're looking at base metals. But, you could look at palladium. So here's palladium. I don't like it. All right, palladium has been on a downtrend. It's just basing sideways here. So boring. I would stay out of palladium. I would, similar to platinum. Platinum at least has a nicer uptrend going here, but I think gold and silver is where you want to be with regards to the big movers in the metal markets right now. You also have nickel, which I don't trade nickel at all because look at the chart of it, right? It's extremely thinly traded. You have copper. So copper is looking much better. You've got this nice uptrend that started back here in July of last year. A little bit of consolidation right now, so not the best looking. Right now, best looking for me is going to be, gold number 1, silver number 2, and that's where I'd be parking it. But I think you got to be careful on this one, Roman, because I feel like you might be chasing things at this point as they've moved so much over the past couple of months, couple of weeks here for gold and silver. So that's my thoughts on moving into metals. If you wanted to, you could diversify maybe and look at an ETF that covers metals. Next, as I'm flying through listener questions today, Teresa says, I bought McDonald's back in October of 2022. At what point would you get out? Why are you asking me, Teresa? This is your money. This is your trade, your setup. I should be asking you, what price did you want to get out of McDonald's? So, all right, let's go look at MCD, which has been a scorcher. Right? McDonald's has been like one of those just awesome charts, just keeps on going. Hard to believe that back here during the COVID pandemic, McDonald's was down around $124, and now it's currently trading at $284. Talk about the Big Mac attack, looking pretty damn good. So from a price perspective, look what's going on here, right? You have this breakout of all-time highs. So I'll go back to a monthly here just so you can see the all-time chart here. Let's go monthly. Right, this chart is absolutely gorgeous. All the way back to 1969. Isn't that pretty awesome? Why, when I was a kid, McDonald's was 13 cents a share. Too bad I didn't hold on to that one. You've had one huge pullback. Like literally, there's one or two big pullbacks in this one where if you look at 1973 to 74 was bad. And then really from 1999 to 2003, the dot-com bubble crushed McDonald's. Other than that, this thing has been an unstoppable machine. One of the best looking charts you'll ever see from a technical perspective. Just uptrend, uptrend, uptrend. If you put a 200 period moving average on this monthly chart, you may have never gotten out. Except for this one right here in 2000 and, maybe I was wrong. Yeah, the monthly one would have stopped you out back here in 2002. Other than that, it would have kept you in here for the entire chart. Let's go back to, let's say, a weekly. Maybe that's a little bit more opportunities to get in and out. Yeah, even that, just a long-term moving average is going to keep you in this one. Anyway, so Teresa, you ask, at what point would you get out? You got to ask yourself that question. If you bought, what'd you say, back in October of 2022? So let me put a vertical line where you bought it at. Let's see, October. Wow, not bad. I don't know where you bought it. Somewhere in these three big green candles here, I think. Yep, so somewhere in these big green candles, you bought it. Great. I don't know what the justification was or why you bought that one, but there you go. The breakout to all-time highs, this is one that a lot of my colleagues I've worked with over the years, and I've had the privilege of working with some really great traders, they call it blue sky territory. So I'll put a line right here on this, the previous all-time high. Right now we are at all-time highs on McDonald's, and a lot of people call this blue sky territory because quite often when you have a breakout of something that's trending strong, you're looking for the next overhead supply zone. You're saying, where is this thing going to stop and turn and potentially come back down in price? Well, it's never been here. You have nothing that you could possibly extrapolate a target point. Now, I know some people are going to go, well, what about Fibonacci extensions? Well, what are you going to do? Are you going to pull from this low here to that high and then back to this pullback, and now you all of a sudden you have some target levels? I don't know. I think that that's a little bit of a janky way of doing it. I think personally, Teresa, at this point, I would set a moving average and use the moving average or a trailing stop as a certain percentage of the price move. You know you're going to have a pullback here soon in McDonald's, right? There's your weekly. Here's your daily, right? It's absolutely due for a pullback. I mean, in the last, month and a half, it has had 3 red candles. 3. I mean, does it get any better than this? I mean, it's kind of crazy. Lisa says, take some money and run. Yeah, I would kind of do what this blue line is. I would set a trailing stop and just move your price, move your stop loss up and lock it in because you know this is going to have a pullback. It's just, do you want to get out of this beautiful uptrend that's going on right now? So I would set a trailing stop or even something as simple as a moving average, which I had on here. I think that this is a 200 period moving average. Let me real quickly check for you. So that's a 200. Maybe you do something like you could do a 50. That's going to get you much closer to current price. But this last month has been insane. How about a 20 period moving average? All right. So here's a 20. And maybe use that as your stop loss. You need something to say, hey, I'm going to lock in some profit here. Otherwise, as I can tell from your comment here, you're asking me where I would get out. That means you didn't know where you were supposed to get out. All right. You should definitely have had that number in line, but once you break through all-time highs, it's kind of hard to make that decision, right? It's kind of hard to say, well, here's where I think it's going, because you have no historical, basis to go off of. All right, let me see here. List of questions. I see a whole bunch of stuff going on here. What's happening in Voyager now? Do you think the opt-in with Binance is a good idea? Sure. There's no reason not to opt in with the Binance thing, Zed. The issue is you're not going to get paid until the regulators and the courts approve it. So at one point, FTX was going to buy Voyager's assets. That fell apart, obviously. Binance stepped in as a little white knight and said, hey, we'll buy all those assets for $1.2 billion. So they were going through with that, and then Gary Gensler and the Security and Exchange Commission of useless idiots said, hey, we oppose this. They were selling unregistered securities, so we're gonna not allow that. It's like, okay, well, how about people get their assets back and then we can figure all this stuff out, but just give me the assets that I put into Voyager or Celsius. So now the courts have said it's on hold. Binance is still saying, hey, we're going to make that purchase. It's going through the court process. What bothers me is the longer that these a-holes at the regulatory agencies like the SEC continue to push, the more likely that Binance is going to certainly just go, you know what? We're done with this. We're going to walk. Deal's off. Screw you guys. We don't want this headache. That could happen, and that would really irritate me because I have assets at Voyager, and I would like some money back. If you opt in with Binance, all you're doing is you're setting up all that paperwork earlier. So as soon as the lawsuit goes through, the remaining balances or whatever proportion of your balances will move right into your account. So there you go. That's the gist of it. All right, let me see what else. I saw some Ethereum stuff in here. Burgers are the best meal for you guys. We love burgers over here, man. Heck yeah. How many shares of contracts? Take some money, run. Yep. Rajesh, converting to Lido ETH, which is not worth it. No, I wouldn't convert to Lido ETH. So if you want to stake, you said second method requires 32 ETH. That's not exactly true. If you want to be a validator and run a validator node, you have to have 32 Ethereum. You can be a nominator and nominate people in the Ethereum network with less than 32 ETH, but that's still to be determined from their whole staking process once it's unlocked and everything's good to go. All right, let me go back just a little bit here because you guys have been typing a lot of questions. Okay, good. Let me go. I think I have one or two more, and then we can wrap up. Oh, that was it. So I got my metals question. I got my McDonald's question. Oh. Where was the healthcare question? This was a good one. I like this one, actually. Grant, great eyes, my friend. I didn't see this one. He says, could you please look at healthcare today? Is today's candle a bearish sign for tomorrow? As you guys know, I am a fan of candlestick formation. So let's go out here and look at healthcare. XLV is the ETF for that one. And lo and behold, what do we have there? A shooting star. So a shooting star, for those who might be new to the program, is just simply a candlestick formation that shows at one point today, this was a much bigger candle. It's a big green candle. And then at the end, for whatever reason, came all the way back down and closed near the session lows. Now, because it's at the top of a run-up here, that's actually a relatively bearish sign because it's kind of saying that the sellers are in control and potentially going to push this back down. Now, that doesn't mean that XLV is done, it's going to crash, and it's going to zero. It does not mean that. But what it does mean is there is a good possibility that tomorrow, if we get a close, if we get down below that low of today's candle, that we might see some profit taking and all of a sudden things come back down rather quickly. Now, I have specific rules for this, which most of the regulars here know those rules, which is I need for it to open up above this red line. It's got to open up above that. If it does and then starts to come back down, there's your shorting opportunity for tomorrow. Anything else? Leave it alone. As far as targets go, where do you think this one's going to go? Well, I actually do like to use fib retracements on things like this, where I will go from, this is really kind of debatable here on this one, but you can say where this big move began. Some would argue it would be a little closer. So that puts my first stop right around 130 bucks. Now, some of you might argue, well, you should use this point, Merlin. Okay, fine. That's still. I like to look for that 38% retracement, which would put me right around 130 again. So that's the setup there for XLV. That's your healthcare. Grant, I like it as a potential short, but again, you have to wait for this to give you confirmation. You could just wake up tomorrow morning at 6:30 and immediately hit that sell short button, but I think that's a gamble, and I think you need to wait and let it play out. If you're making the assumption that shooting star formation represents weakness, then you need to see the weakness. Because if it opens up tomorrow bullish, let's say it opens up and it gaps up and just keeps on running, then the psychology of that candle is null and void. Because this candle tells you, or is telling you, that the sellers were in control. They came back and won that battle for the day. They closed it near the lows. Great. If that energy is still there by the sellers, then we should see this thing sell off again tomorrow. If not, then move on to something else. Make it an easy trade. It's no need to overcomplicate these things at all. Okay, so that's that stuff. Let me get a sip of water. My throat's just been bugging me. All right. There was a question here that I want to get to from JR. He says, does non-linearity have any relevancy to the technical analysis when viewing the chart, and can all these terms be used in the same sentence when it comes to understanding financial investing? I'm kind of confused on that one. If I'm going to try to extrapolate what I understand from that question. There's a lot of stuff that I don't quite understand. But if you look at charts, which, looking at price charts like this, all they are is a reflection of transactions. It's just a reflection of buyers and sellers. And, you look at this chart of healthcare right here. It looks absolutely amazing, right? It looks just great what you see on the screen here. But I can look at this chart and discern the emotions, the fear, the greed. There's all kinds of different things I can identify here on that price chart that happened over the past couple of months. However, that all changes if I go to something like this, where this picture is way different. It looked really strong, but now all of a sudden it's looking really weak. So, we can use different time frames to give us insights as to when things might be changing. Some of my colleagues are always, saying you got to start with the big picture time frame, right? So, Bob Dunn, rest up there, Bob, or give me some signs. He'd say start off with your monthly charts. Beautiful chart in this XLV. Boy, healthcare looking good. Start at the long term and then build your plan from there. Work your way down to the weekly, right? So, this is a Tom bar chart right here. Tom bar chart is something that's just been going sideways. Look at this XLV on the weekly. I mean, this thing has been sideways for almost 2 years. All right, Tom, you gotta love this one. It's bouncing between 121 and 140, and it looks like it's been doing it over and over and over again for 2 years. Great. Well, I'll go back to that daily, and maybe now start to look for trade setups based off of that. And the little nuances of what happens in these candles on the different time frames might clue me into potential price changes or trading opportunities. But, you know, I made a comment on the show the other day, which Deb from the dog park mentioned. You know, it's you torture yourself long enough, you torture the chart long enough, it'll tell you whatever you want to hear. You can't force the chart to tell you something, right? You can't force it to say, oh, this is going to happen. But a lot of times, if you want to be bearish on something, you'll keep looking and making excuses for it. So let's look at McDonald's, for example. Hard to be bearish on this. The only thing I can say is I'm expecting a pullback. Other than that, I'm bullish as hell on McDonald's. Not that I like their food, although they did bring back the hot mustard for their chicken nuggets a couple years back, and that saved me. But, you know, you look at this price chart and you go, oh, okay, I'm bullish, bullish, bullish. If you're bearish on McDonald's, for whatever reason, you're going to find an excuse to say, see, I told you so. So you can't look at this chart here and tell me that that's bearish. That's a daily. Oh, let me go out on a 4 hour. Nope, that's bullish. Let's go down to the hourly. Nope, that's bullish. Go down to the 5 minute. Oh, guys, this is bearish. Look at this. Look how bearish this is. Oh, man, it's been just weak all day. So, again, you torture a chart long enough, it'll tell you whatever you want to hear. In this case, this bearishness might simply be a buying opportunity if it comes back down to some areas of demand. So, yeah, again, I don't know, JR, if I really answered your question there. I know it was a bit abstract, the question. However, I think that markets are fractal in nature. And in all these big patterns, we see smaller patterns. And inside the smaller patterns, you see micro patterns. And this is where Elliott Wave practitioners, you know, like to cite the different characteristics of Elliott Wave, which is this super cycle and the microcycle and all that different stuff. I would say to make it easy for yourself as a trader or investor in any time frame, you just go and look at price action and understand what price is telling you. And you got to know that the bigger time frame is going to be the bigger moves. As you shrink down and get to that 5 minute or 1 minute time frame, those are not going to be powerful moves. But those could be the beginnings of a much bigger move. Time will tell how that all plays out. So they're non-linear, they're fractal in nature. You can modify them to fit your personal needs. And this is something that, you know, I spend a lot of time when I'm teaching trading is you got to find out the time frames that fit for you. Right, I like a lot of different time frames, and I like to look at them all the time. I start off typically with the daily. So for my setup, I've got daily, 4 hour, hourly, 15, and then I have a 5 minute chart on my center screen. And that's on the top is the market, on the bottom is whatever individual security is I'm looking at. And some of you may be thinking, well, that's overkill. Not really. It's just I want to be able to, at a quick glance, know that this is my most important screen over here, which is the daily. Where are we there? And then whittle down and see, am I spotting a turn? Am I seeing things slow down? Is there an opportunity here to buy at demand or sell at supply? Then I'm going to go for it and apply those. So use all those different time frames to your advantage. All right, let's see. Big Ab, I like the strategy on shooting stars and hammers, but I wait until the market has opened for 30 minutes before making the trade. Yep, great, right? And again, you've taken my rule, modified a little bit for yourself. Awesome. I think that's a great thing to do. That first opening 15 minutes particularly is extremely volatile and all hell breaks loose and you can get whipsawed there. So waiting 30 minutes? Sure. You know, and here's the thing with Big Ab's modification of that strategy. What are you doing? You're basically taking, let's say here's our spectrum of trades between my two hands. This is all the possible trades that could happen. And you're saying, well, I'm going to wait for the market to open. Okay, now I'm going to shrink that down a little bit. And now he says, well, I'm going to wait 30 minutes into the day. I'm shrinking it down a little bit. And now he's saying, well, it has to open above that line, shrinking it down. So he's limiting the possibilities to make trades, but he's also knowing that the probability of those trades working are better because I'm now waiting for all this confirming data. So I like it. I think that's a great way to look at it. Joe says, Merlin, since the recession is taking its sweet time and bonds are the only place to protect your cash, no, I wouldn't say bonds are the only place to protect your cash. I would actually say the opposite. You know, look what happened with Silicon Valley Bank. They were trying to protect their cash with bonds, and that's what blew them up. I mean, I was working with a friend of mine today, showing him the 1% strategy. Safest place to park your cash? Find an ETF or something that's not moving a lot, sell options against it and collect premium. I mean, that to me, I would say that's the safest. You find something, a broad market index, you could use the SPY, it's very liquid. I'm feeling tropical today, Ed Wood. And that's where I would say. I wouldn't buy dividend paying stocks because if we do go into a recession, these things drop 20, 30, 40%, you'll lose it. If you can right now be going out 5, 10% lower than current market for 30 days and collect a 2% premium. We'll go there. What did you say, Tom? Oh, yeah. Everybody knows that one, Tom. It's funny. You're really dating yourself. I'm not even reading your comment, but I know that one by heart. 2 all beef patties, special sauce, lettuce, cheese, pickles, onions on a sesame seed bun. Boom. You talk about clever marketing. You have people 30 years later, 50 years later, singing that damn song. Crazy. All right, let me run through the outlook for tomorrow. Not as outlook, but just kind of what's happening for tomorrow. Tomorrow is a pretty big day. One thing I didn't mention in Monday Morning Must Knows, and I know I'm going to get grief from somebody on this one. I do these things for OTA called Monday Morning Must Knows that they release Sunday night. And it's really all about, hey, what's happening this week? And if I miss anything, people are just jumping down my throat on that one. And I did not this week put in earnings. This Friday, we know it's the kickoff to earnings season, and you have a lot of the major banks are reporting on Friday. You have, I think it's Wells Fargo, JP Morgan, and Citigroup all reporting on Friday. So that's going to be a biggie, but that's Friday. Here's what's cooking for mañana, and this is a biggie as well because inflation is a huge talk track here. CPI numbers coming out tomorrow. They're expecting that to drop to 0.2% on the month over month, but really it's all about the year over year. They're now saying it was 5.2 and they've modified it to 5.1 is their expectation for the CPI number. Boy, that's a pretty steep decline there. It makes me feel a little bit nervous that you're expecting that big of a drop. So I don't know. I don't believe we're going to come out at 5.1. I think we're going to come out at like 5.2 or 5.3. Something higher than 5.1. I think they set that one way, way, way too low on that CPI number. But again, that's coming out 1 hour before the markets open. I think all hell's going to break loose when that one comes out. That is the big daddy that everyone's really paying attention to for the week because CPI, again, is what's steering the Fed's talk track for raising rates or lowering rates. Now, you may not have seen this, but yesterday, the Fed funds futures jumped again. Let me bring this one up for you guys real quick. So for those who might be new, Fed funds futures are the expectations of what the rate increase, decrease, rate changes may be at the next meeting. So here you can see the next meeting is May 3rd. And I have been holding my line saying I believe we're seeing 25 basis point increase. I don't think you're going to see a pause. I certainly don't think you're going to see a cut. But notice what happened yesterday. A week ago, there was a 55% chance of no change at all. Today, that dropped to 32%. And now, all of a sudden, it looks like a much greater chance of a 25 basis point increase. So, again, we've got almost a month to go before we get there. But they are anticipating a 25 basis point increase at the next announcement or next meeting. If the CPI number comes out at those numbers that they've posted there, that 5.1 or lower, let's say... I didn't get that. Shut up, Siri. If this one comes out at, let's say, 4.9, I think you guys can imagine what's going to happen. If we come out at 4.9 on that CPI number year over year change, all things change. You will see this number change immediately. It's going to drop huge and say, nope, not 25 basis points anymore. We're going to stay the same. And the talk track may even go into a cut if the inflation number come out super, super good. I don't think you'll see a cut. It's one of these two numbers is going to happen. It's either stay the same and pause or raise 25. I am in Big Eb's camp. I all but guarantee a 25 basis point increase here. I mean, it just makes sense. Then they'll see how the impacts on inflation go for the next 8 weeks. If that number still looks good, then they'll go to a pause phase. So I agree with you, Big Eb. I think it's going to be a 25 basis point increase and then a pause. Earnings-wise, you've got nothing to speak of for tomorrow. It's kind of a boring day with regards to earnings. JR, yeah, no problem. And you feel free to ask questions on here. It's okay. My main concern, ask what the question was, the curves, which can be valid trend lines. Well, look, trend lines are where you believe things have gone. I know it sounds very subjective, but I could ask everybody here to draw trend lines on a price chart, and I'm going to get a lot of different lines. I could even look at something as simple as McDonald's, right? Where are you going to draw trend lines on this chart? Like if I just left this here, everybody is going to be drawing them differently. You're going to have somebody is going to draw the trend lines down because it's been trending down. And someone's going to draw them through those peaks like that. Someone else might draw them through the bodies, which would be more like that. So I've got two. I'll draw all the different combos of trend lines on here. All right, so this goes through the peaks. So there's two trend lines. You're going to get somebody that draws a trend line like this, which is not a trend line, by the way. You can't, on a downtrend, you draw trend lines on the top. On an uptrend, you draw trend lines on the bottom. I'll get someone who has drawn their trend line like this. There's that one. I'll get another trend line that's drawn here. This one's pretty close. But you see, everyone has different interpretations. Somebody's going to come along and go, oh, I see a trend line right here. So, you can torture this thing like crazy. You want to make sure if you're drawing trend lines or doing any sort of technical analysis, you got to ask yourself, what are most people going to be seeing? What are most people going to use and see? And I think that's when they really start to have power, because it's the group psychology. It's what is everybody thinking about that specific security at that moment in time. If they're all looking at the same trend line, they're most likely going to react the same way, which just makes it easier for you to understand which way things may be going. Made yourself, and you are a much younger old guy. I can't grow no facial hair, but I just didn't feel like shaving. It's the beauty of not really going to the office anymore. What are your thoughts on the auto industry? Loans, business in particular. Do you think that there is a bubble there? Yeah, I think that you're going to see. I think personally, if you want to buy a car, do not buy a car right now. Don't buy a car. I think they're going to have an inventory problem. Probably maybe later this year or next year, or a lot of vehicles are going to be on the market. So you had all these people buying cars, and a lot of them were paying way overpriced because of the whole chip shortage and supply chain disruption. I know a few people that bought cars, and you're shaking your head going, oh my God, you paid how much for that thing? The sticker price is $30 and you paid $45 for a normal car, not even an exotic one. So you have people right now that are underwater on their cars, their car payments. I think that's going to lead to a bit of a financial crisis as well, where you see a lot of people just getting their cars repoed. Then I think automakers are also trying to play catch up here because of all the supply chain. So they're ordering as many cars as they can. I know around here, just on Harbor Boulevard in Costa Mesa, there's a couple car dealers. The lot is like 10% full with vehicles. That's not the way it should be. It should be 99% full, right? Don't leave any room in there. Leave it for parking. So I do think you're going to see some problem with the auto industry. I think you'll have some serious discounts being made by automakers late this year to early next year. I'm not in the market for a new truck, but I'll tell you what, if the price is right, then I may look for a new one. But I think you wait. You're kind of like timing these markets. I saw that some of the auto numbers come in. The sales have been declining. If they get a big inventory backlog, they're in trouble. You had Tesla today this weekend dropping their price yet again. So I think it's a reflection of demand. Tesla cutting their price is basically saying, we're not selling as many vehicles as we have. We're still going to manufacture a whole bunch. So let's drop our price so we can sell these vehicles. And I think that's going to be reflective of the entire industry, not just the EV segment, but also other cars. My 2006 F-150 is currently selling for only $7,000 less than what I paid. I know. Joe, when I went into the car dealership, I went with a friend of mine to buy a car. The guy turns to me and he goes, hey, bud, he goes, what kind of car do you have? And I go, I got a 2016 Toyota Tacoma double cab 4x4 off-road. He goes, oh, you got equity in that thing. And no one has ever said you have equity in your car like it's got value. And I could have sold it for more than I paid for it, which was just insane. But then what do I have to do? I have to buy another vehicle, and I'm stuck paying an inflated price. So I'll just keep it. Yep. Loans for cars are tightening up. Houses are tightening up. So you have the loans themselves being a bit more difficult to get. Plus the inventory numbers are going to be higher and higher. Just spells for a great opportunity for those of us who are patient and waiting to buy a new vehicle. Anyway, there you go. Hey, Joe, thank you so much for the comment. Buy a Toyota. I have a Toyota. Joe, for $1.99, I'm not buying a Toyota. Could you tip me $30,000? On the calendar it says FOMC on Wednesday. That's not an open market committee. Let me just real quickly make sure. Let's go to Forex Factory. Yeah, that's not a meeting announcement. So you have FOMC members speaking. Let's go to the calendar here and go to Wednesday. So usually that's going to be the open market committee. So meeting minutes. So basically, this will give us a little more insight into what was said at the last meeting. That actually is a fairly important announcement. People like to read through that announcement and really dig for all the little words that were said by each individual person, but it's not the major market mover. Again, when you see these things come out, let me make this a little bit bigger for you guys. There's your FOMC meeting minutes that PBJ is talking about. That's at 11 a.m. Pacific time, right? So that's going to be a couple hours into the market. Just know that right around that time, you expect to see some volatility there. Like, it could really be volatile, and you're going, what the hell is going on? It's because those meeting minutes have been released, and people are interpreting that data. More importantly, I think would be this Bank of Canada rate announcement that's happening. That'll be a big one as well tomorrow. Did I have that on there? Yeah, I did have that on there. All right. That's going to do it for me. I'm going to wrap this one up. I do have a great guest coming on the program tomorrow. My eye is bugging me too. Falling apart over here. Larry Jacobs is going to be joining us. And, we always have different topics that we go into when we have these guests on the program. A lot of times I ask them, say, hey, what topic would you like to discuss? And I was talking to Larry, and Larry's like, you know what? I have an idea, something I would like to discuss. I'm like, okay, well, I'm always down to hear what Dr. Larry Jacobson wants to talk about. And tomorrow, we're going to do a specific topic that's just based off Larry's discussion, and it's trading principles. So I don't know which way that's going to go, but he says, I want to talk about trading principles. So I'm okay. We'll talk about trading principles with Larry Jacobson tomorrow. If you guys have anything you want to discuss or ask Larry, you can just email me at TraderMerlin@gmail.com, send them on in there, or you can put your comments down below any of the YouTube videos. Always happy to see those comments down there. Edward says cars and all are depreciable. Not all. There's some cars that will go up in value forever and ever and ever. You look at my personal favorite car, which is a 1969 Subaru Deluxe van. It's a two-stroke van. If you ever find one of those things, man, I want one. They'll go up over time because scarcity. There's only a few of them out there. Same thing with like a rare Lamborghini or a rare car. They'll go up over time in value. 68 Camaro, those aren't going to be dropping in value much. Why? Scarcity. So some cars will go up in value, but yeah, your Toyota Prius, that's not going to go up in value. There's plenty of those being cranked out all the time. Anyway, thank you guys so much. Hope you enjoyed today's show. I am going to sign off right now, and I'm going to go for a walk, take the dog to the park, and enjoy some sunshine. I will see you guys tomorrow with Larry Jacobson on Trader Merlin. Take care.